June 22nd, 2020, sending out our weekly market update. Hope everybody had a nice weekend wherever you are. We'll try to make this one as quick as we can tonight, give you guys the most pertinent information, and then move on with the rest of our week. So, per usual, we'll just go through updated price targets, look at how last week's performance was in terms of price targets and stock movement, and then we'll look at where we're at now and where things are going. One thing has changed in terms of our trend that we need to keep an eye on, and then we'll just quickly run through the fundamental update. You guys probably are all seeing all the headlines everywhere, so there's not too much random news that you probably haven't seen, but we'll look at it and kind of give my view of what it looks like and how I am interpreting it and go from there. So let's jump right over to the charts and look at the S&P 500. Here's our 6-hour chart. I think this is a little cleaner. We'll jump over to the 2-hour here in a minute. But in our weekly update last week, I'd mentioned to you guys that the pullback and the sell-off that we had seen that prior Thursday, so not last week, the week of the 15th, but the week before that on Thursday when we saw this nice big sell-off, I told you guys, hey, this is just a pullback. The trend is still up. All we did was, we made these new highs after we finally broke out of this 29.75 level on Memorial Day, and we pulled back down to it. And until we see these broken and closed below on volume or see a new low created from this low, the trend is still up. So it was time to be long there, even though everybody was going, oh, is this the start of a new downtrend? And I mentioned to you guys that our upside target was up around 31.75. So I'll show you the 2-hour here in a second. But if you go back to that Memorial Day update when we finally broke through this 30 or 29.75 range, I also mentioned to you guys that, hey, sometimes when it breaks up through here, yeah, it's going to hold this level, but if there's a low or a high in this instance right below it, don't be surprised if it tests that. And that's what it ended up doing when it came back down after that Thursday sell-off. It came right below it and held these. You'll see this pretty often, especially when it's something like this where this level's already been tested. It just kind of gives, it's not a false break necessarily, because this level, this 29.75 never really got broken because it needs to close below it. Remember that in trading and investing, where the market closes at a certain time is what its actual value is, not really what goes on during the day, right? It could dip all the way down here and then climb back up, and if it closes above it, these levels still hold. But this one was held a little bit better, and so really our best judgment is if you see it close below this with a good amount of volume to the downside, or we get a new low that comes in at any point in time below these. So that held. Let's look at the 2-hour real quick. Here it is, and again, mentioned to you guys last week in the update that when we came back down and retested this, I expected, and well, not expected, but what tends to happen before things change trend, remember, is they don't go just straight up to straight down to straight up to straight down. They make a trend, then they have kind of an initial impulse move the other direction, and then climb back up and stall out a little bit before they would actually really make a trend change. And so if this was going to follow that same pattern, I was looking for some highs to come in maybe around this 31.75 mark. And we got pretty close to it. We got up to 31.60, but we didn't go all the way up. So when something like this happens that gets close but not close enough, if we move this out of the way, if it turns and reverses and this ended up being kind of a pullback high, it technically still counts. We never really like it when it doesn't really get close enough. So it definitely still can climb back up, and in that instance, this 31.75, 31.80 level still holds as a point that I'll be watching for when it gets there to see if it holds as resistance or not. But sometimes you just get this where it just doesn't quite get there. But if you were long off these lows when I told you guys that, hey, this is just kind of a pullback and we're probably going to wick down and then make a nice little recovery, I would recommend taking any profit at any point in time if you haven't done so yet, because we are now sideways, right? Like I just said, this can still hold, and if we go up, I'm still watching for it when it gets here, but it got close enough for me that I'm not now going, hey, I'm still looking for this thing to go up. Now I am actually waiting to see where the market goes from here. I don't have any active positions for swing trades. I still have my long-term 8 to 12 month shorts and put options and credit spreads on, but I don't have any swing trades. So right now, today I was just day trading, and until we really get kind of a clear either break up through here and make some new highs, or we really see some signs of strength to the downside, we're not in a trend necessarily. Now, we did get this one breakout here to the downside, and this was technically creating a continuation pattern that broke to the downside, but similar to Memorial Day when we broke the 29.75 level, this happened after hours and did so on really light volume, which isn't really what we want to see. So it's technically also considered a false break, but we did, after consolidating for 4 days at the end of last week, we did break down and make a new low here. So I would say that the trend is sideways with a bias down, and I will have that bias until this 31.75 level is broken clearly to the upside. That would be when I'm a little more bullish about things. But if you're trying to make a short play right now at 3100, 3110, it's speculative. This can go either direction to me. I don't have a great feel for it, so just know why you're entering positions, and you can be long, you can be short if you want to speculate, whatever you want. But until I see one of those two things happen, it's really sideways for me. So everything is holding up the way that we've outlined since this break of Memorial Day. Everything's flowing very smoothly. So that's what we look like in terms of the price action. And if we look at just the fundamentals for us, everything is unfolding as we've talked about. Again, it's all this information I told you guys in the flash update last week. This is information only for you guys, and then everybody just kind of has to make a decision based on that information. So far, all of the information and the stuff we've been talking about on these videos, as well as our personal or group conversations that I have with you guys, has all been the right information. The market reaction might have been different and might continue to be different than we would expect or believe that it should be based on that information, but the information is there. All right, so of course, not going to spend much time at all on this, but what everybody's been watching, what I've been talking about for weeks is, the second wave. Obviously, we saw today and over the last few days that technically the U.S. overall curve, we're now going back up. That doesn't surprise me, right? California continues to rise. Florida set a single-day spike record. But what's most interesting, and the reason I bring this up, not that it's any new information, again, like you guys know what I feel about the second wave and how it doesn't appear that anybody cares. So I think we should just all take it with a grain of salt in terms of the market, is that when Florida and Texas reopened initially, a few weeks before everybody else, after 2 weeks when I told you guys, wow, I'm actually pretty impressed that we haven't seen this second spike, and maybe we won't end up seeing this. At that same time, their mayors or governors, don't quote me on who it was, but I remember vividly reading a news article that they were basically beating their own chests going, well, yeah, we're not going to look like New York. We're smarter, and our citizens are smarter, and they're going to socially distance, and they're going to wear masks. And there's no reason to think that we would ever see a second spike like they did in New York, even though New York didn't have a second spike. But it was basically saying, hey, even though we reopened early and everybody thought it was going to be really, really bad, haha, in your face, that's not ending up happening. Well, that's not actually true anymore. And they're now coming out today and over the last few days, and there are news stories specifically from them saying things like this. Now their tune has changed, and they're going, oh, wow, we're seeing an increasingly troubling trend of cases. And the real spike, especially in hospitals, nobody can argue with the fact that there are more people being hospitalized, and that is getting very concerning, and that it would be irresponsible to just act on optimism and think that it's going to go away. Whereas right when they opened and things looked good for them, they were taunting everybody going, haha, see, told you it wouldn't be like that. This is the piece of troubling news that, again, the market's not reacting to, but this is important to me to keep an eye on. I think this is the sort of news that's important right now, more so than the fact that we're seeing all these new cases and all these new spikes and all that sort of stuff. Not that this isn't important by any means, but the market has shown this is not new. New cases and no flattening of the curve. Like California never flattened their curve. So it's not new news that we're seeing new cases and we're getting the second wave. And since the market hasn't responded at all in the past to it, it would be not brilliant of us to expect that it's going to, right? That's what I've been talking to you guys about for the last 2 weeks now. And I had to change my tune on that because I thought it would, but I had to act on what I saw the price movement doing. But now that you're seeing, and we're seeing these sorts of comments by Florida and by Texas, going, oh, okay, and you're starting to hear some talk of some governors thinking, hey, maybe we should slow our reopening down and stuff like that. Again, none of that has come to fruition yet, and none of that has impacted anything economically because everybody else still continues to push reopening, and that's more important right now to the market stock prices than the fact that we're seeing these cases. It's just like the market overall, right? You're looking for potential changes of trend, and when do buyers and sellers stop, right? When do we stop seeing so many buyers and we start to see people selling, right? And when we had that big sell-off, when do we see people running out of steam selling and we're starting to see buyers come into the market? That's the trend changing. And that, in my opinion, is what news articles like this and what they're saying is starting to potentially show.
Relatively early signs.
That we're seeing maybe a change of trend in that aspect. And if that continues and that trend starts to catch on to other states and blah, 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 that would be something that could potentially cause governors and mayors to go, okay, we actually do need to shut down, or maybe not even shut down again, but okay, we're going to backtrack a little bit and go back to whatever phase we were in before, right? And that could be news that causes spells for this. So none of the coronavirus stuff is new. I don't want to harp on it a ton. You guys know how I feel about it, but this is the sort of stuff that I look at way more than, hey, the market's going up, people don't care about coronavirus, or the market's going down, people are starting to care about coronavirus. Like those headlines they are what they are. This is the sort of stuff that I look at and see, okay, interesting and something to keep an eye on, similar to Beijing. So on that note with Beijing that I sent you guys last week, mentioned, hey, we don't know enough yet, but this is the story to keep an eye on the headlines of, and we just want to see if it escalates or if it calms down. And Beijing's response seemingly has been phenomenal, right? They've classified certain areas as very high risk or as medium risk, and basically they're based on where you live and what risk zone you're in determines what their kind of quarantine protocol is and how many people can go in and out, all that sort of stuff. So they stopped that thing at the source. Told you guys during that flash update, they shut down that entire market, and they worked swiftly and quickly to just go, hey, we're stopping this thing and we need to nip it in the bud before it gets anywhere. And so far that seems to be the case. I mean, I think today, I think they said they only had nine new cases that came from that. So that's a really good sign. But again, that is the sort of response that's nipping that thing in the bud. Whereas here we are in the States pumping reopening and not caring that caseloads are spiking in our individual state. We're just going, oh, whatever. We're pumping it. Whereas Beijing gets one outbreak that is potentially to be really bad, and they hammer their response to that and make sure they take care of it in every way, shape, or form. So things look good from them, from Beijing. Not as concerned as we were originally, but again, something to keep an eye on and continually keep an eye on with that outbreak and any stories like that. And that's really where we stand today. And the last piece of it is Trump came out today and was talking and mentioned that he plans on having some form of second potential paycheck. I don't want to quote the guy, even though he's hard to miss. But he didn't, again, he did, here's where you guys can read it. He didn't say when it's coming out, but strongly suggested that there will be a really big next stimulus package that would come directly to citizens, similar to the 1,200 that we got the first time. So that's where we stand right now. Make sure to just trade the price and what you guys are seeing going on. I'll of course update you as we see any difference in supports resistance levels getting broken or anything like that. Send out a flash update. But then the last thing I'd say about all this is, it's following very closely to what I've been talking with you guys about since March and February, of kind of what my, I guess you could say, views would be in terms of after we had the sell-off, the optimistic recovery. And of course that went on quite a bit longer than I anticipated, no doubt. But my view has always been, as you know, that heading into earnings season was really when I thought we could see the next wave of what I would believe to be selling if the numbers are as terrible as we would probably expect, with companies having to basically kind of close down and get hit pretty hard for 2 months. But the thing to note about that is, and I believe it's almost 1 month from today, it might be July 27th, might be when earnings season starts. It's right around the corner. It's about a month from now. But the key there is that I still believe that time is a trigger one way or another. My belief would be that it would be a trigger to the downside because of what I just mentioned about the company's bottom lines. Excuse me, I can't even talk today, goodness gracious. But it's also possible that it's a trigger to the upside, and that all these numbers that companies post, maybe they actually did really well during this time, or better than we expected even though they were closed, or they find a way to kind of do some nifty accounting to make it not appear so bad on paper or something like that, that causes people to be even more optimistic. It's very possible that that happens, right? My belief is that it would be down, but if we've learned anything over the last few months, it's, again, what I tell you all the time: trade the price, not what we think the market should do based on a piece of news. So that is coming up. That timeline, it is still unfolding as anticipated originally. So the volatility we would expect to kind of increase as we get into July and get past the 4th of July holiday weekend, and people's optimism starts running out and they realize that, hey, we're not actually going to go from 40 million unemployed to 2 million in 2 months like we originally anticipated, or whatever it is that people kind of look at and go, okay, here's actually the value of this stock or the value of the market. And that would come up probably sometime in the next month, heading through the end of September. So that wave is around the corner. I just wanted to bring that back to the forefront now that it's getting closer, so and remember to keep an eye on things and know what you're doing with your trades. But other than that, go have a great week. We'll update you if there's anything new that comes up, and we'll talk to you guys later. See ya.